Hey everyone, it's Mike here from Orderflows and welcome back to my channel. I'm glad you could join me for today's video where I'm going to talk about the age-old question, which is the best chart that I should be using in my market. And before I jump in, again, if you've been enjoying these videos, don't forget to subscribe to the channel, click the notification bell so you don't miss any new uploads. I'm trying to get at least one video out a day. Sometimes I get two. My goal would be like three ideally, but I'm always looking towards the comment section because it's fascinating. Some of the feedback that I get, on and the questions when seeing where traders struggle, and sort of help clear that area up for you. So your support really goes a long way in helping me create more videos just like this one. All right, so let's go ahead and get started with today's topic because this came from a user comment, Michael. I like your name. Michael O5496 says, "Hey Mike, great video again. What is the ideal chart for crude oil? Parentheses, tick, range, or candlesticks? All the best." Now, sadly, there's no ideal chart for anything. You know, Trading is a personal journey. There is an ideal chart for you, okay? And in deciding what type of chart is best for you, you have to understand sort of your own trading mentality, right? We all have unique personality traits, right? Some people are more patient. Some people aren't, right? Some people are a bit more, what's the word? Cardiac kids, in the sense that, they need the adrenaline from a moving market to think properly or something. It all depends. And also it comes down to, your account as well. Can you withstand bigger drawdowns, or do you want to try and keep the drawdowns as small as possible? Are you an intraday trader getting in and out of the market very fast, just looking to pick up, a handful of ticks here or there, or are you looking for more grander moves? Okay, so let's take a look. I'll sort of go through how I would determine, what chart type. So, the question was specific to crude, tick, range, or candlesticks. I think you meant time-based. I always use, some form of candlestick, whether it's a footprint, right? I also have a candlestick there. If I was looking at a regular time-based chart like this, I'd always start with a candlestick. I'm not going to, you do have a choice of charts that you can use. Obviously, there's, minute. You can use Heikin-Ashi is something that I like to look at once in a while. Maybe sometimes when I'm bored. It's mainly the same. I mean, the way Heikin-Ashi is sort of a blend of two candles into one, but you sort of get the same. You're going to generally get the same movements. If whoops, here we go. Let's go here back to the sort of the different chart types. Well, they don't even have simple bar chart here, but I don't get involved with things like Kagi charts, things like that. I mean, you can if you want. Point and figure, line break, obviously the volumetric, which is a form of a footprint chart. It's the Ninja Trader version. But basically, I stick up here, right? I stay within tick, volume, range, second, minute. Reason why second, when I'm looking at a second-based chart, I use 30. I don't think you can really go down to, at least me, a 5-second chart is going to be very fast. 15 seconds, okay. But then, you got to take into account things like latency. Okay, so here we are. Let's just go back to right now. This is a crude 1-minute chart. This is where I believe you should always start in a market, right? It's a simple time-based, ideally 1-minute chart. If you're an intraday trader, people say, well, I'm a day-based trader. Okay, well then stick with a daily chart. But if you're going to be scalping in and out, looking for quick moves here and there, you're going to want a fast-moving chart. 1 minute is where I would start as sort of my base, right? In the sense of this is my starting point, okay? Can I understand what I'm seeing in the order flow, right? Am I getting enough movements in a bar? Okay, and by what I mean by enough movements is, are the bars basically having up and down movements? The vertical movements up and down. And yeah, I mean, obviously you're going to get big bars like this, but really what I'm focusing in on is the smaller bars, right? Okay, here's 3 price levels on this bar right here, 87.56, 57.58. That's at least sort of the minimum that I'd be looking for. Okay, so, 1 minute chart on crude is, sort of the minimum that I would, or, I'm fine with that. I'm comfortable. Let's take a look at 30 seconds. Okay, and, 30-second, when you're going to be running into sideways activity like this, you're going to see some bars here, 2 price levels, 2 price levels. Again, this is a 30-second chart. So it's moving, you're getting decent movements on a 30-second chart. So yeah, I could probably try and analyze a 30-second chart because it's getting enough volume, right? Bars are having, a couple hundred contracts, here. You do get some areas, some pockets of illiquidity in the sense of small volumes, 87, 83. Then it follows it up with, 200, 400, back down to 100, 200, 97. So it's decent, okay? This is about as low as I would go. A 15-second chart, I think, is going to be moving a bit too fast for my taste, okay? I mean, yeah, on big bars like this, okay, but realistically, you're going to be getting a lot of bars like this where it's 2 price levels, 1 price level, 2 price levels. Obviously, during the more busier times, you're going to get some movements. Let's take a look starting at 8 a.m. Basically, yeah, you're getting some decent movements, but then once it slows down, it just flatlines on you, okay? And again, 15 seconds, I think, when the market's busy, you may start running into some latency issues. Then as far as tick-based charts, I generally will start with 100. When you're looking at a tick-based chart, it's on, the amount of trades. I don't know why they call it tick. I guess so. I know why they call it tick, but it would make more sense if they call it, well, no, tick is fine. I'd say trade, but then people think that's the amount of trades. But, the way the markets are nowadays, with all these execution algos, it's almost like they break down the orders down to the smallest possible level. So like the average trade that goes through on a lot of markets, it's like a 1.4 contracts, just because it's, again, that's the average. So you can't, it's just, they really try to break it down. And that's why you're seeing, this is a 100 tick chart, the volume is 112, 107, 105, 125, 112, 150. The ticks are really, right around there. Okay. 100 tick chart is okay. Decent price movements. It looks a bit like a, 30-second chart, honestly, in terms of movements. Now, obviously, when there's going to be times where you get some, sort of a rush of orders coming in here, and you span a few bars, right? 1030, 00, 14, 28. So you got, within 30 seconds, you got 3 bars forming. Okay, so you sort of got to bear that in mind. It can, it's 10:30 in 9 seconds, 10:30 in 17 seconds. So within 8 seconds, you're forming another bar. And then about 17 to 31, about 15 seconds, another bar. 31 and 33 seconds to 31, 35. That's another 2 seconds, and you got the next bar forming. Okay, so it's just, it can move pretty fast on you. On crude, at least with 100 tick. Now, what are your options? Well, you could try move up another level. 150 or 200 tick charts is slowing it down a little bit. Okay, so you can see, like, it's about close to a 1 minute chart, honestly. But really, at the end of the day, what you want to be able to do is have a chart where you can understand what's happening in the order flow. It's not about trying to go as low as you can go and as fast as you can go, but you want to go as low and as fast as you can go that's giving you information out of the order flow that's actionable. Okay, it's not about how fast you can trade. I mean, something like this here is nice. Coming up here to the high, you could just sort of see the buying getting weakened. Delta's getting, 52 as you're going up towards the high, the negative, then 42. Right up here at the high, just 5, and then the negative delta is coming in, minus 41, minus 82, minus 72, the delta volumes here. right? Strong negative, and you get a little bit of a sell-off. Yeah, that's on a 200 tick chart. 200 tick chart, again, you're looking at each bar is about 200 contracts. And if I was going to look at volume, first I'd sort of go back to the 1 minute chart and sort of get an idea of, what's normal volume. Obviously, that 8 to 10 a.m. time is going to give you much more volume on a minute by minute basis, right? You can see some bars here, 900, 800, 400, 700. Here's nothing, 170, 181. So for volume, you really got to sort of find a sweet spot. 100, I think, is too small. That's just, in my opinion, just way too small. Especially on a market that is, just looking back at the busier time, you can just see look at this here, 9:01 and 4 seconds, 9 seconds, and you're getting 1 bar, 2 bars, 3 bars, 4 bars. You're getting about 4 or 5 bars within that 1 second. Okay, so that's going to be hard to trade. That's a 100 volume. Yeah, you can just hit configure. So you want to add a volume. I do have 250 and 500 here, but if I wanted to add, sometimes people like to use, fib numbers or whatever. You can do that in here, right? You just add it to, whatever, I don't know, 987. Okay, click apply, click OK. Honestly, between 987 and 1,000, there's not going to be much different. But then, so I just sort of step up, 500 volume. Okay, it's decent because you really want to focus, when it's the busy times of the day. Is it something that's actionable, right? And yeah, 500 I think is decent, but to at least from 8 to about 10 in the morning, when the markets tend to slow down, maybe you can still keep it there, obviously, because it's based on volume, but maybe it's not getting, it's slowing down, right? So from here, 11:06, the next bar takes about 5 minutes to form, right? 11:06:52 to 11:11:06. All right, but then there's some bars that's very fast. 11:17:30, 11:17:37. All right, that was that big bar on the 1 minute chart. So it varies. For me, honestly, I think a 1 minute chart is fine. Now, range-based charts. Usually, I'll start with on markets that have decent movements. I'll usually use an 8 range chart. Like currencies, crude oil, S&Ps, markets that have a little bit more volatility. I would use something a bit higher. Like if I was trading YM, I'd probably use a 10 range, or MNQ or NQ, I'd probably go to a 15 range. Because again, at the end of the day, you still want to just have a chart that's going to put the order flow in a format that's easy for you to trade, to understand what you're looking at, okay, and give you trades, basically. You don't want to, again, if I were to go down to a 4 range chart on crude oil, okay, let's just scroll back here to sort of the busier morning time. Okay, what do I see? I see a bunch of chop back and forth here, right? Red bar, green bar, red bar, green bar, red bar, green bar. Okay. That's going to be difficult to trade. Right? And, there's some more chop here, and it's happening relatively quick. How can I tell it's chop? Well, red bar, green bar, green bar, red bar, green bar, green bar, red bar, green bar, green bar, red bar, red bar. Just, simple. So, me personally, I would just rather use a chart, an 8 range, even a 10 range would probably be fine. And people don't hold me say, well, Mike says you got to use a 10 range. No, you can use a 9 range if you want, if it makes sense to you. But at least on 9 range, using things like value areas makes sense to me, right? I've seen where there's imbalances because I'm getting enough volume taking place in a bar that it's easy for me to understand what I'm seeing in the order flow, okay? So at the end of the day, there's no right chart. There's a right chart for you and your trading style. Again, I know guys that use a 3-range chart on crude. I can't. But that's me. They can. They're fine with how quick it can move. I mean, if I remember this morning, right here, I mean, it's moved 9:00:24 seconds. Within 30 seconds, you've got a move from 1, 2, 3, 4, 5, 6, 7 bars basically. But again, it depends on your trading style, what type of chart you want to use. Okay, so again, it's a personal journey. Because I did see in another comment, these someone else, not you, Michael, someone else had mentioned that they were advised to use a 5-range chart on, I forgot what market it was. I think it was crude also or something. And the guy, he's saying that he's struggling. Well, it's your chart. What works for one person doesn't always work for somebody else, right? And just like sports, right? Sports and trading have a lot of overlapping. Okay, I have got 2 boys. They both play soccer. One's a goalie. The other one is new position now. Before he was right wing. Now they want him to play midfielder, and he doesn't want to play goalie. Okay, it's a different skill set, right? He's got speed, so he can come back and defend, and he can also attack. Whereas my son plays goalie, he likes to sort of lay back, survey the market, so to speak. Survey what's going out on the pitch. Okay, and so it's the same thing. I mean, they're both good, but they're good in their own ways, and it's the same in the markets, right? You got to find what way that you can analyze the market that's going to make the market make sense to you so that you can succeed. Okay, so I hope that answers your question. Sort of how I go through sort of the process of finding what chart I could use. And to be honest, it's not like I have a lot of different chart types that I use. Like for this market, for crude, I'm going to use an 8-range chart, but this other market, I'm going to use 12-range chart, and another market I'm going to use a 7-range chart. No, generally, I generally keep it at 4-range charts for markets that move slower, like bonds. Just normal markets like crude oil, S&Ps, I'll use an 8-range chart. Currencies, most of the grains, I'll use a 4-range chart. Markets that move a bit faster, like NQ, I'll use a 15-range chart. YM, I could use an 8-range chart on YM, but I actually use a 10-range chart. I think it's fine. If I've noticed the volatility is picking up, then I'll go to a 15-range chart. But generally, it's 4, 8, and 15, and it's just 15 for those more for NQ specifically. So basically 4 and 8. So it's not like I'm using this market is a 3-range chart, this one's an 8, because I see guys post stuff up, and it's like every time they post, I had this big winner, then I look at their chart, because they're posting every day. They always like to show their charts, and one day it's a 1,000 range chart, the next day it's a 1987 chart, the next day it's a 3-minute chart. Well, that doesn't make sense to me, right? You really got to choose your chart, stick with it, and if it's not working for you, then you can adjust it. Okay, but you don't just adjust it on the fly. You want to make it a chart that you can understand what's taking place in the markets. Okay, so anyway, guys, I'll end that video here for today. Again, I hope that clears that up on what sort of charts, my process of going through the charts. So if you find this helpful, be sure to leave a comment below, because at the end of the day, order flows is very robust, right? And you want to have enough trades taking place in a bar that make sense. Okay, so if you enjoyed this video and you haven't already, be sure to subscribe to the channel so you don't miss any new videos that are coming out. So thanks so much for watching and being a part of my order flow community, and I'll catch you guys on the next video. Bye-bye.